Welcome back to the channel, where we'll delve into the world of technology and innovation. Today's episode is all about the powerhouse in graphics processing, NVIDIA. But before we jump into the thrilling details, make sure to hit that like button, subscribe, and ring the notification bell to stay updated on all the things in tech. Now let's dive in. NVIDIA has been a game changer in the world of graphic processing for years, dominating the market with its powerful GPUs. But as with any investment, there are risks and rewards. So buckle up as we explore the risks and rewards associated with investing in NVIDIA. But first off, let's talk about the rewards. NVIDIA has consistently delivered groundbreaking graphics technology, from the GeForce gaming series to the professional grade Quadro and the high performance Tesla for data centers. The company has secured its spot as an industry leader, and the stock performance reflects that. And speaking of the stock price, here we can see the stock has done very well for itself and its shareholders who's been here for the long term. So for the maximum period here, we can see that the stock has performed a 74,000+% here. And this does not include the dividends, but it's just without the dividends. So with including the dividends, it's a little bit more, but this is just a massive stock performance here. But it's not only the long-term investors here who's been on board for many years, but rather even if you've been here on board, for the past 5 years, you've made more than 1,400% gain here on this stock. So this proves kind of that the stock has done really well, both in the long term and in the short term for investors holding the stock. Perhaps some of you listeners have actually owned this stock for many years, so if you have, please, drop a comment below and share your thoughts, what you think about the company right now. Now, let's discuss the market dominance. NVIDIA's GPUs are everywhere, powering the gaming rigs, laptops, and even data centers these days. With the rise of artificial intelligence, machine learning, the demand for NVIDIA's high-performance GPUs have skyrocketed, and this market dominance presents a significant reward for investors. And this is also being reflected in the net sales of the company, where we can see here in 2015, the net sales for the company were 4.7 billion almost. And we can see here 10 years later, in the most recent quarter here for 2024, we can see that the net sales here in the right bar is almost 45 billion. So during these past 10 years, this company has increased its net sales here by almost a 10x. And this is one of the reasons why this company has seen a significant rise in share price, because a lot of investors love this growth. They love the data center growth here that we've seen, and we'll look into more here in the video, but this is just massive growth here for this company. Do you think any other company can challenge NVIDIA's dominance in the graphics processing market? Let me know in the comments below if you do. But of course, with great rewards come great risks. One major risk is the cyclical nature of the semiconductor industry. Economic downturns can impact the demand for consumer electronics, affecting NVIDIA's revenue. So investors need to be aware of these market fluctuations. And now for the earnings per share of this company, and we can see that here in 2015, the company produced a earnings per share here of $0.28 per share, or 28 cents if you will. We can see here in the most recent quarter, all the way to the right here, we can see that they posted a $7.7 earnings per share here. So that's an increase of 2,650% here. So it's just a huge gain here in earnings per share, and management has done a terrific job here to increase the EPS here from 0.28 here up until 7.7. It's just crazy. Not many companies can pull this off. I wonder if any analyst could have predicted this 10 years ago, that NVIDIA would have done so great here over the past 10 years. I don't personally think so. What do you think? Please comment below. Now let's talk about the elephant in the room, which is competition. While NVIDIA has been the front runner, competitors are not sitting idle. Companies like AMD and Intel are constantly pushing the boundaries of graphics technology. This competition could impact NVIDIA's market share and, consequently, its stock performance. I personally think that NVIDIA still has the first mover advantage here, and I still think that they're very strong, but I don't know, it's kind of hard to tell. What do you think? Do you think that, you know, Intel or AMD could catch up? You know, drop your opinions in the comments, but I think it's going to be tough, I think, for them to catch up, because NVIDIA they just seem to be so dominant just now. Now for the net debt here for NVIDIA, and we can see that the company do have a negative net debt, which is considered positive because it implies that the company has more cash than it currently has debt. And this has several benefits. For instance, financial flexibility allows the company to pursue opportunities like acquisitions without heavy reliance on external financing, reduced interest payments. With more cash than debt, the company can cut or eliminate interest payments, leading to saving costs, lower financial risks. Companies with negative net debt are perceived as less financially risky, as they're less dependent on external financing. The ability to weather challenges. Having a strong cash position helps the company navigate economic uncertainties without any liquidity issues. And having a negative net debt here of $7.3 billion means that they have a lot of excess cash that can be used for dividends or share buybacks or enhancing shareholder value in one way or another. And speaking of dividends, this company does actually pay a dividend. However, it's not very big. It currently has a yield of 0.03%, which is barely nothing. But we can see that they have increased the dividend here, as you can see in the picture. You know, they've gone from 0.09 to about 0.16 cents per share here in terms of dividends, but they haven't raised it here for many years. But, you know, at the end of the day, they are a dividend paying company. But I think a company such as this should be able to pay much higher dividends, I think. And the company currently offers a payout ratio of about 2.1%, so this is super low, and I think that they should be able to double the dividend, and you know, it should barely make an impact on, you know, R&D spend or anything like that they would have to limit themselves. So I just think that management just thinks that, well, the dividend is so low anyway, so let's not increase it or something like this. But they should be able to do a lot of dividend increases here if they want to, without, I think, you know, sacrificing too much of its growth. Now looking at the cash from operations here, and once again we can see that this company or management really has done a tremendous job here. So they went from $906 million here in 2015 and have increased it all the way here up to 18 billion or almost 19 billion here in the past 10 years, and that represents an increase of about 2,000%. So it is kind of crazy how good this company has become, but we can see that it's been a pretty steady growth here except for 2023. So management has done a tremendous job here, and I think it just proves that this is a really great company to own. Now let's shift focus here to the future potential here of NVIDIA. The company has been making strategic moves into emerging markets such as autonomous vehicles, edging computers with advancements in AI, and increased demands for high performance computing. NVIDIA is positioning itself for even more growth here. Now I think that this post is pretty interesting. So there's approximately 8,000 data centers in the world. Assuming each of them would purchase an initial 16,000 NVIDIA GPUs from the H100 series and the GH200 series or higher, NVIDIA would sell a total of 128 million GPUs initially, not including expansion or upgrades. NVIDIA sold approximately 500,000 H100s in 2023 and around 2 million in 2024. The potential initial demand is 64 times the 2024 shipments. At approximately $30,000 per GPU, it would amount to about $3.84 trillion in total sales in the coming years. Jensen Huang, the CEO of NVIDIA, mentioned having $1 trillion to spend on upgrading data centers for AI in the next 4 years. At $3.84 trillion, it would take around 10 to 15 years to reach that goal. It aligns with the prediction of $400 billion per year by Lisa Su, and Lisa Su is the CEO of AMD, one of NVIDIA's competitors here. What do you think about these predictions? I think that they sound pretty bold myself, but I think it's interesting to know what you're thinking as well. So please do comment below here if you think that this will actually happen. But this would actually be, you know, if it comes true, it would be great for the semiconductor industry for sure. And just to mention here as a disclaimer, I do own NVIDIA shares as the recording of this video, so it can just be good to know that if you do think I sound a little bit too bullish about the semiconductor business and obviously NVIDIA here, well, that's probably the reason here, just so you know that. And the CEO of NVIDIA is pushing, you know, a lot of these car manufacturing companies or vehicle manufacturing companies such as trucks and even robots and so on. So Jensen Huang is pushing, you know, saying that anything that moves should be autonomous, and NVIDIA can offer the technology to make it autonomous. So the CEO here of NVIDIA is really pushing, you know, to make these companies become more autonomous and use their products and their offerings here that they can offer to these companies to make them more autonomous compared to what they are today. That wraps up our deep dive into risks, reward, and future potential of investing in NVIDIA. But before you go, don't forget to hit that like button and subscribe for more tech insights, and share your thoughts in the comments. Thank you for joining us today, and until next time, stay curious and tech savvy.